Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to look at the overall market. We're going to compare the Dow to gold. We're going to look at the Dow Jones, S&P 500. We're going to look at the Nasdaq. We're going to look at some of the leaders in technology. We're going to get kind of a different picture just to see what's going on out there. So let's dive in. I'll give you my opinion, and we got a bunch of charts here. So looking at the upper left here, zoom in. This is the Dow to gold ratio. I drew in the chart here of this kind of resistance line, uptrend line, and then we were trying to break here. And it looks like we broke to the downside, and we're coming up and retesting this portion here. And what that means is that we could potentially see this go lower, which means that gold could outperform the Dow at some point. Because we already kind of broke to the down, we broke to the downside of this uptrend, and we're doing one of those retests where it kind of just sits there. So let's monitor it. Let's see what happens. But if this comes down, it means that gold's going to outperform stocks, and that's going to be a huge, we'll call it a huge change of outperformance if that were to happen. It hasn't happened yet. I mean, we did break to the downside. I'd like to see this come lower and create a lower low. Here's the Dow Jones and what it looks like just off of a daily chart in dollars. We came up into this point, and it looks like it looks like an ascending wedge, and we broke to the downside of the ascending wedge. I'd be curious to see if this thing heads lower over time, which then is going to boost the Dow to gold ratio if gold turns around here. If we get that inflation coming, I think this is going to head lower, which means this Dow to gold ratio, gold's going to outperform the Dow. And the Dow could go down or sideways to down while gold goes up. That's my guess. Looking at the Nasdaq Composite, again, we've got this type of squeezing up a little bit. It kind of came up. We'll see if this holds, if it goes up or down. Again, I think increasing interest rates when it gets to a certain level is going to put pressure on these guys to go down. They have continued to go higher, but I'm looking to see what potentially could happen with interest rates going up. And here's the SPX, S&P 500. Again, we've been going in this channel up, and we broke to the downside, and sometimes we come back up and do a retest and then head lower. And remember, we always break out, do a retest, and then we break for the most part. Let's watch this and see if this is a topping pattern. I am guessing it is, but I don't want to be quick to jump to conclusions. Here is the dollar. Now, this is a funky setup. If you look at it from this perspective, you draw the line across here, and we draw this guy here. Which way is this going to break? If this breaks up, it's a funky scenario. We could have a crash. We could have a short-term crash. But usually in a crash, you would see the 10-year go down, which means that people are running into the dollar, and they're running into bonds thinking that interest rates are going to go down, because you'd see people running into bonds. And bonds is the largest market. That's where the smart people are at. But we're not seeing that. We're seeing a 10-year go higher, which makes me think that people are selling bonds and worrying about inflation. If that's the case, I would think, and we may not get it, we may get a strengthening dollar here. And it's just the dollar's the best of the worst, or best of the worst inflated currencies. But usually what happens in an expansionary phase of real estate, and we're just starting to enter it, the dollar usually heads lower, not higher. But we could head higher in the short term. That is a possibility. But I don't think it's from a crash, because the 10-year is moving on up, which means people are selling bonds and getting the heck out of bonds, and which makes me think they're worrying about inflation coming up, a real negative rate. Now, looking at some of the areas, this is gold. We've got this pattern that's developing. You can draw it through here, and we're right at the bottom of the pattern. Is this going to break higher? Don't know. We're going to have to wait and see. We're right there at that lower part of the pattern. Looking at Amazon, it's just been going sideways. It's lost momentum. What I would look for now is a lower low. I'm looking for this to drop because your momentum has stopped. It's been going sideways. And the buyers haven't been able to push it higher, and we've got interest rates going up. That's not going to do well for these high PE ratio companies. Looking at Ishi Bank, Ishi Bank, however you want to say it. This looks like we're going to actually fall or go up. I mean, we've got this wedge. It is a gigantic wedge. If we break to the upside, see you wouldn't want to be it. We break to the downside, we could see almost maybe like a crash. So let's watch that. Let's continue to watch it. I'll continue to post this, on a weekly basis or so. Looking at Newmont Corporation, I'm just kind of trying to get a good view. Looks like we're playing with its lower trend line here, support line. Now, if this thing drops and we see this drop and the dollar go higher, we could have a short-term, pretty good size pullback, including gold, because all these are at support lines and developing patterns. And we're seeing these other guys also breaking to the downside. So we could see a pullback in everything. Now, looking at gold, this is Barrett Gold. Here's our descending channel. We're still in that channel. And looking at Apple, Apple's still heading higher. It is defying gravity. So that one still looks pretty good. I don't see anything broken yet. And that's what I had for the day. I just kind of wanted to touch on a bunch of different things. Could we have a crash? I don't think we're going to have a blowout crash. We could have a pullback, yes. And the sell-off of Nasdaq, S&P, Dow, that could impact everything. Because everybody is so leveraged up using margin that when we get a pullback, they're going to be margin calls, which then begets more selling. And when you get more selling, at some point, things will sell off, and they'll sell off good sectors, bad sectors, doesn't really matter. They just have to raise cash. But I don't think it'll be long lasting. I don't think it's going to be a blowout deflationary crash. That's just my opinion. The blowout deflationary crashes come from real estate. And real estate's doing incredibly well at the moment. So that's my opinion on it. And some of these, they look okay. Like Apple's doing pretty well. Some of the other ones, Amazon's kind of stuck, and that's stopped. S&P 500, Dow, and the Nasdaq Composite. Can't say they're doing that great right now. I think they're going to come under pressure. And if we watch the 10-year, if that continues to move on up, I think we could have a short-term problem, and then the money's going to start to rotate into commodities and precious metals right after. But you know what? No one knows the future. That's kind of just my financial opinion on it. Obviously, some people are going to disagree on the path that this is going to take. I don't necessarily know exactly when these things start to break apart, what that looks like. I think we're going to probably have a dip and then rocket higher at some point in commodities. How big is that dip? I don't know. I'm going to ride through it either way. If we get the dip, it's a buying opportunity. If we don't, then we ride higher. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.